Hello, everybody. So, how's everybody doing today? Hope everybody's having an awesome day. 16th of March, 2015. Not making any trade calls or recommendations because you and only you're responsible for the trades you may decide to take. And the fact that you're listening to this means you've read, you understand, you accept all the disclosure disclaimers here on the website and on the blog, understanding that we're just performing some live technical analysis in a learning context for educational purposes. Only 50 in the house here. Let's do this, guys. So basically, I didn't have time to, I didn't manage to get back to the office in time to record the Outlook last night for this week. So I'm just doing something quick here. So let's look at some blank charts just for a change. Now keep in mind that this week is really all and only about FOMC. Today, Monday trade, very slow day, not an awful lot going on. Tomorrow, Tuesday, we've got basically those policy meetings, minutes out of Australia. We've got a BOJ press conference. We got ZEW, we got some CAD and US data. We got that GDT price index out of New Zealand. So there's clearly stuff going on. But, Wednesday also claimage count of the UK. But really, it's all and only about the FOMC. Again, we still have stuff on Thursday and Friday. But it's the big thing is, Fed, what's going to happen on dollar strength? Is Yellen going to give any clues on rates? Are they going to talk about dollar strength, et cetera, et cetera, et cetera? So that's going to be the focus. So if we just look at some blank charts, because that's what a lot of people like when we look at blank charts. And let's just do a little focus on the Forex markets here. So what's going on? So we can see this extreme really pretty much showing up on USDJPY, right? And this is a chart we talked about, we've been talking about, we said it's really all about those highs, and we saw that price was coming all the way back up into that level, and you can see it clearly. What was really interesting was that we came up, right, back into these previous highs, and you see here the market had just poked back above it and didn't manage to get any traction setting in these new highs. And once we get back into there, everybody getting super excited at highs, but usually, it's not a great idea to get aggressively long in front of a brick wall unless it breaks and holds outside. And you see here, for now, it's containing. And this is pretty much where we're hovering in terms of zone into this FOMC, right? And so the next big question is, make or break. Are we going to get a decent correction off of this back down, or are we going to be propelled higher, right? And if you look at this even on a daily, most people will be looking to buy any kind of dip into this level. So, but there's clearly a risk of some profit taking. If we get a harder correction, what I would focus on is on this big level to the downside. But pretty much here, you're looking at a lot of chop here, and this is just a broad range where the market will likely try to cause some pain, but it's holding bid into that FOMC. Now, keep in mind, if you look at it even on something like a monthly, right? This is a really interesting point on USDJPY, and we would expect really, and we've talked about this before. You see how we're holding here around the 61.8 level. Most probably here, either we get some kind of a decent dip here, some kind of profit taking. If we start to break back above the 121s, we could see a very, very, very aggressive move. Either to the next resistance, but this could next resistance point here, or this could really just be the dollar strength continuing for that bigger rotation back into those 130s. So clearly pivotal level, key zone, a lot of interesting areas here on the yen. What's happening on euro? Really all about these lows. A lot of people talked about the famous or the infamous 105 level, right? And what's happened is basically, as again one would expect, some healthy profit taking here. We came through, we took out the barrier interest, and now we put in a little reversal here on the 4-hour, nice little reversal, and it's trying to turn back up. So again, keep in mind that if you look at something like a weekly chart on euro, actually most likely better to look at a monthly, you see there's not an awful lot down here of support all the way back down into this whole, you want to call it 99s into these 96s. So that's the next broader level of support here. A lot of people also looking at the move from lows into those highs, and you see just by clockwork magic you've got that 78.6 retracement, which is coming in at that level. So that's really going to be the aggressive area that attracts should we get a sustained move below, right? A lot of people are talking about parity, and again, you know, people like to look at round numbers, but I think if we break back down aggressively, the focus is going to be those 99.20s. Right here, short term, would it be healthy to see a little bounce, a bit of profit taking into Yellen? Yes. You know, is there a risk of basically this being a very crowded trade? Yeah, for sure. Most likely, unless something substantial changes, you'll probably see rallies get sold. So I think the other level on aggressive bounce that you would be looking at, you know, is that whole area into those 111s, right? That breakdown zone, and this was the zone where a lot of people were really pressing the shorts, you know, and we said, you know, as long as we can hold the pressure on here, as long as this upside resistance when it was consolidating at lows hold, this is likely going to continue to hold a very, very heavy tone, right? So that's the upside. As long as we hold here, this is heavy. So I would say any kind of squeeze, expect to see a lot of sellers coming into there. If you want to look at shorter term levels, I mean, you could look at anything from, you know, this area which is coming in around the 109 and 108. Short term, you've got a lot of resistance basically in the 106.80s. This was the level that got sold very aggressively, but globally speaking, you know, pressure is still on, and it's all going to be about Yellen and the Fed. Cable, what's going on cable? So cable, if you look at it on the weekly, very aggressive move, and what we looked at, we were looking for price to come back down into 150, 148 area, and we were expecting this to hold, right? What we said is that this was a very nice structural support, cyclical support, and it was our biggest conviction view on the first test, right? As we know, first tests are the best. So here we had a lot of conviction on the bounce on the long areas here, and when it came back down, we said, you know, we expect this to try and hold. Not as strong conviction as on the first test, because in a retest it's going to become lower odds, but I think this took a lot of people, ourselves, by surprise too, in terms of the velocity of the move and how it broke through this 148. So going into the week, the focus is going to be, you know, how do we react and how to behave around the 148.00s. If you look at this on the monthly also, there's not an awful lot to the downside, you know, all the way until we get back down all the way into this area here. So this could have a lot of room to fall, and what we said is structurally below the 148, the 144s are going to be attracting. That's the bigger move on a cyclical point on a weekly charts, but so that's the big level to the downside. What I would be focused on again is how we behave around this 148.00. A 148.00 is the bull bear line going into the week, heavy below, a bit of a bid tone above for some covering, into the upside, you know, those 150s. Unless we get a weekly close back above the 150s, this will likely continue to hold very heavy tone. Okay, what's going on Aussie? Aussie, interesting chart. We focused on the monthly. You see here there was also a 200 moving average here, and it tried to base here, and then we got this smack down across the board, and it's putting in new lows, but it looks like it's still struggling to get a lot of traction here. And so this is really the focus, how we close not only on the week, but again on the month here at this level. If you flip back to a weekly, you see that we put in those lows, we came back down, and you know, are we going to hold? So as long as we hold below this level, at least even here intraday, you'd expect this to continue to trade with a fairly heavy tone going into FOMC, right? But again, it would be healthy to see some kind of profit taking. I think right now most of the sellers are going to be looking to sell this aggressively on any move back into those 78s. If we start to clear that, then I would say the 80s, mid 80s will attract very aggressively. This is going to be the bull bear line going into the week. And keep in mind that FOMC market tends to like to take out most of the stops, but this is pretty much where we stand, and we just have to be a bit patient. But it'll be interesting to see action around here. A pair which is holding a much nicer bid tone, which we prefer, is the Kiwi, right? And what we discussed is, you can see this on a monthly. And what we said is you really have to respect this aggressive candle we put in last month, right? And we said, you know, bar the RBNZ coming out and actually cutting rates, we expect this to form some kind of a bottom here and still hold a bid tone. Now, what's tricky is, you know, there's talk of RBNZ intervening, you know, and they really want to snap this down and talk the currency down every chance they get. But right here, you have to respect this kind of action. So again, as long as we don't take out those lows and we don't close below those lows, we'd expect to see some kind of covering here. I think there's a lot of pressure here with those 76s being smacked down sold, whether that's the RBNZ or somebody else, we don't know. But you know, there's a lot of chop inside this area. So going into the week, this is the big chop area. If we close the week or any day below these 71.60s, this is a likely hold very, very heavy, and we could see an intensification of the slide. But especially if we close back above here, then I would not be surprised to see us try to take a stag all the way back into those 80s, 79s higher up. But very interesting, a very interesting action at lows. What else have we got? CAD's another interesting one, and we talked about the fact that we were stuck inside this sideways chop area, right? And we could build a case both for the short side and for a basing for the long side. Now, once we got this trying to break to the upside, previous resistance acting as support, then we said, okay, there's a very high chance we're going to test the opposite side of the range. Right back here is this holding a bid tone, okay? So what's happened is we break all the way into those highs. Again, crude's getting sold very, very hard. And what we said is really all about those highs. You know, how are we going to behave? And the question is, especially through this week, whether it's crude or the commodity complex, but if we manage to break and get a daily close above those 127s, then I would expect those 130s to attract, and the move could be very, very aggressively. You know, if we get this correction on the dollar, some healthy profit taking, then don't be surprised to see a bit of a move down. The most interesting level, really, if we start to get sold hard, will be on how it behaves around these 26s. You know, we'll have to clear back outside this whole area, below this area, to get a move back to the bottom part of the range. But as long as it holds there, it'll probably hold relatively bid. EJ very, very heavy, similar to Euro. You see here, it's trying to, it broke down, it's trying to rotate higher. It will have to break above this previous support, acting as resistance, right? And if we break back above, we could easily see a little correction all the way back into the 28.90s, 29 level. Right here, this is a bit of a very, very choppy range, and it will likely continue to stay choppy range into Yellen, and it's going to be a big question on what happens on Yellen. If you know, I would suggest you take a look at the monthly here with the 100 and the 200 on the monthly. It's a very strong support here, will be key to see, but you know, holding very, very heavy and likely a lot of chop inside this area. And EURJPY, you know, just very, very heavy. You know, we've been structurally short this for a long time. All these series of all these measured moves, you know, completing very nicely. You know, this initial short at the 89.30s back down. This was the big next aggressive move, and which had targets in the 172.60s, and that's done and dusted. So if we continue breaking lower, the next level to the downside is the 67s, 20s, right? And that's the next big level. That's a 150 extension coming here. I would keep a very close eye on what happens here on the monthly, on the weekly. You know, if this closes below, then I would say that move back into those 67.20s is still completely in play. If we close back above, then we could see some kind of covering potentially all the way back up, even into those 77s. But I would expect that the way this is trading, again, because we talked about this also being a structural play on, you know, Euro versus UK rates, you know, we'd expect any bounce here to get sold again for the next continuation lower. Okay, so that's where we stand, guys. There goes. I just wanted to, since I didn't manage to put that up yesterday, I wanted to put something up for you guys. I know a lot of people like to listen to these outlooks, so I hope you enjoyed it. As usual, thanks for all those likes and sharing this. I really appreciate it, guys. I'll post a recording. Have an awesome one. Keep it tight. Stay safe on FOMC week, and see you guys on Twitter. Have an awesome one. Bye-bye, guys.